but he talked about backing M1 with gold, and the numbers he used was 2,365,000,000,000 divided by 261 million ounces. You get $9,044. Well, I liked his. I gave him credit for it. I talked about it. His video was very cool. I think it's a little aggressive to say that by the end of summer, but he talked about backing M1 with gold, and the numbers he used was 2,365,000,000,000 divided by 261 million ounces. You get $9,044. That is what gold would be today if we backed M1, which is the Federal Reserve notes in circulation. That's the way it was prior to 33. When the dollar was backed by gold, it was M1 notes in circulation, and M2 is credit. It's 92% credit, according to Mike, and it's all the numbers that you see in your bank account. That's just credit. They don't have it at the bank. If you had $5 million in your bank account and went there and demanded it, well, you'd be lucky to get 2% of that, which is interesting. By the way, just noticed a story today. Spain has introduced strict new rules on cash withdrawals. Withdrawals over 3,000 euro require advance notification to the tax agency. Over 100,000, you need 72 hours notice. So, but, getting cash is harder and harder. But anyways, that was a little side digression. But when you talk about Mike's point, he would be talking about fully backing the currency in circulation with gold and making it redeemable. It's aggressive. He said, well, 9,044, they would want some wiggle room, so they'll put it at 10. It's a take that is well thought out and articulate, and I think it's aggressive. I don't think it will happen, but I liked it anyway enough to talk about it last week and give him credit. Thought it was a cool presentation he did. That you look at that chart, there's nothing emotional about it. You look at it on a daily or an hourly I get it, but no, nothing has changed. And the big money that's doing this, that's trying, I think, to reintegrate gold, to reaccumulate gold. I mean, before the big Basel III deal here in July, where all the contracts need to be backed by physical metal, all of this stuff, they don't want it to be too easy, because when it's too easy, it gets too much attention. When it gets too much attention, there's too much competition. And when it's too much competition, they don't get to do what they want to do. And that's get in line before the rest of us. You just need to take a step back and realize that, not everything you read on the internet is true. And at least some of it might be factual, but I have a very hard time believing that the Chinese sold 1 million ounces of gold. I really do. I think that reeks of, and why do it when the markets are closed in China? You would think that's not how it would operate. So, yeah, but to see it pull back up here in after hours is promising. But you could see volatility, and it's ironic that till Cinco de Mayo, to May 5th is when they're on holiday, and you got the Fed meetings on May 7th. Do not expect anything spectacular, maybe until after the Fed meetings. Could be greater volatility anyway between now and then. Yeah, I think 30, right in the 3,200-ish range, 3,200 would be that support level, and you could see it test 3,150. You could see it go all the way back to the 3,000 level and test it. But to me, nothing has changed. That's why, what I mean by the bull wants to take as few people along for the ride as possible. You have major big banks that need to close out these positions, big funds that need to close out these positions. And this will not go straight up without it being, I think, a very bumpy road. I really do believe that. And the greater the volatility, typically it precedes some sort of a major move higher. So this to me is all par for the course. But nothing's changed. Truly, I believe nothing has changed. I think we'll all know when something has changed. To me, nothing at all has changed, not even a little bit. Yeah, I think they are. Their all-in sustaining cost is as low as it's ever been, with gold high and oil cheap. They're printing money. And Rick is one of the most impressive people I've ever met in my career. And I'm fortunate to call him a friend and worked with him very closely for 2 decades. I've never met anyone that is as well informed and also connected. In that industry, it's as much what you know as who you know. He would tell you to choose people or to choose companies that have staff that has been serially successful, is the word he uses or the phrase he uses. Um, and no one is in a better position to put you into good companies than Rick is. For me, I would avoid the juniors and I would avoid the exploration. These are the ones that give you delusions of grandeur, and I would stick with the majors and the streaming royalty companies. Like Newmont, Franco-Nevada, Royal Gold, Silver Wheaton, Pan American Silver, Hecla, First Majestic. I mean, these are all great companies that when the funds transfer even just a very small portion of their money into the mining shares, which they haven't, they've been largely ignored. And to see mining shares priced where they are, where gold and silver are where they are, it's crazy to me. So yeah, I think that you should. And to me, you envision your finances as a pyramid. The base of your pyramid, 60, 70% should be things like paid for real estate, farmland, gold and silver. You could say cash, even though it's a losing proposition. It should be in the base of your pyramid. The middle portion, maybe 20%. 6-month duration treasuries paying 4.5%. Utility stocks paying a dividend. The home run at top 10, 15% Bitcoin, cryptocurrencies, and mining shares. This is the Swiss philosophy. You can make more on the top 10 or 15% than the bottom 85%, if all goes well. But their theory is you lose every penny you put into the top 10 or 15. You don't even make a nickel, just break even on the middle portion, as long as the base of your pyramid is large enough to keep you from going backwards and it's low growth. And look at gold, it's outperformed everyone's expectations for quite some time now. So yeah, I think you should. Just don't invert your pyramid, and be judicious as to which stocks that you choose. And it would not hurt at all to come to Rick's conference, say hello, and like you said, he does handpick all of the companies that are there for a reason. Just stay away from the juniors and the explorations. Just focus on the majors. You could get a 2 or 3x return easily on those because they've been largely ignored. They're massively undervalued and represent such a small. I think if you took every mining share on the planet that has a smaller capitalization than major companies like Coca-Cola or Microsoft, or all of them combined. And so, yeah, the potential is really quite strong, but they are risky. And that cuts both ways, upside and downside. So just be careful.